Good morning, everyone. This is Srikant Rajan. Welcome to the Stock Market Podcast from MPIinvest.com, the only platform where you learn to invest and trade in the stock market, plan your financial goals, invest in different financial assets, and grow with a community of knowledgeable investors. If you are not a part of community yet, visit our website MPIinvest.com to join the community free of cost. Coming to the stock market, the Nifty opened with a small gap up yesterday at 15,334 in spite of SGX Nifty showing a gap down opening. And that was a good sign, in fact. But after that, the Nifty continued to consolidate in the same range which was shared in the community. That is 15,200 to 15,400. This was the same thing which happened on Friday, and this continued to do the same. In fact, if you look at the broader market was actually in the red. Most of the stocks were in red. Mid cap, small cap, everything was in the red. But the false positivity was probably given majorly by the HDFC twins because they kept rallying. In fact, we could see HDFC as the top gainer yesterday, which was up by 3.93%, and it was also supported by Hindustan Unilever, which was up 3.8%. Naturally, people are taking the safer havens where they are moving on to FMCG stocks, which are stocks which can actually perform in a bear market. So even the IT stocks are good for the bear market, but unfortunately the valuations were so high, and because of which we have seen the IT sector actually falling big. So probably people are still not confident, but I am very confident on the IT sector, and that's exactly why I added a few IT sector stocks, good ones yesterday. Of course, I've shared the same in the community as well. Coming to the market yesterday, the FIS sold for 1,217 crores and the DIAs bought for 2,093 crores. So DIAs continue to buy and support the market well, but the FIAs continue to sell, and that's something which is the major reason for the Indian stock market to correct so much. So that is something that needs to be watched out when the FIAs would actually finally start turning to net buyers, and that would be the day probably the stock market would start rallying again. But as of now, there are no major triggers across. We don't have any cues in India which can support the market at this point. And even globally, there are no any special events except probably day after tomorrow. Tomorrow we have Jerome Powell testifying in the US. So that's something we can watch out for, which might give out some information. But apart from that, there are no major cues which can actually support the market. So that is what is leading to uncertainty in the Nifty right now. But like I always say, this is the best time to invest, and just start investing if you have not done so yet. So that's going to give you some amazing profits in the coming months. So apart from that, coming to some stock specific news, there is a big news from Reliance. In fact, SEBI has imposed a penalty of 30 lakhs, which is nothing for Reliance, in fact. But then yes, they have slapped this fine because their compliance officers have not promptly disclosed the stake sales in the subsidiary company Jio. So in fact, you must be remembering that Jio had actually sold some stake to Facebook and Silver Lake in 2020. So they have not really updated all those things as required by SEBI, and that's exactly why they've been fined for 30 lakhs. 30 lakhs to Reliance might be like 1 or 2 rupee for any common man. But then yes, it is of course a news that can be watched. Apart from that, if you look at, we also have a news from Maruti, where Maruti has launched their 2022 Brezza, which is one of the best selling, not one of the, in fact, the best selling SUV that they have. Even though they call it SUV, which I don't prefer to call, but still, yes, it's a great selling vehicle, and it's coming with new electric sunroof and all that actually, which can actually give some excitement. So that's something that can give some positivity to Maruti today. Maruti already being so much oversold, probably we can see some positive on that side. Apart from that, there is a bad news for Biocon, as the Joint Drugs Controller has been nabbed taking a 4 lakh rupee bribe from Biocon to approve their diabetes injection without third round of clinical trials. So this is something, not just, it's not a question of, not only is a question of security, and its safety, but also the trust on the company, which is kind of, getting into stake. So such activities can actually, take the trust of the companies. But then yes, big companies do cover up things. Let's see how things go on there. So let us see how the Biocon stock reacts, which of course should be a slight negative there. If you look at the next part, I would say there is an interesting thing that you need to know. Even though interest rates are going up, as RBI is increasing the interest rates across the country, we are seeing a few banks also increasing their FD rates, probably by about 0.3%, 0.2%. The biggest rise has been seen in 3+ years FD, right? Imagine somebody investing into a FD for more than 3 years, which of course will give you the best interest rate of about 5.5%. But then if you just remember, if you look at just last 6 years, the interest rates have actually gone down by, I would say, if you remember, around 2014 and 15, the interest rates used to be around 9% offered by SBI, and right now it's about 5.5%. That's almost a 40% cut in the interest return. If people are still investing in FD just thinking that the portfolio will never go into minus, over the long run, people don't realize that they are not even beating the inflation, which is more than 6% today. So with this kind of investment into FD, that too for a 3 to 4 year period, is something really bad. Because if you are looking for a long term 3 to 5 years kind of investment, why not invest in the mutual fund, which can give you more than 10% returns in at least 5 to 6 years, right? But if you are investing into FD, I don't think there's any bigger mistake than that. So that's something that people need to understand. So in 6 years, if the interest rates have come by 40%, what do you expect in the next 10 years? Right? So the only thing is, it is almost like keeping the cash stagnant. And unfortunately, India, which saves almost 53 trillion rupees on a monthly basis, doesn't have more than 5% equity share. So that is something really bad. So, let us educate our fellow members, and, we need to ensure that members are able to, join our community and start investing in the equities to make amazing profits in the coming months and years. So, apart from that, if you look at the markets today, the Asian markets are kind of looking positive. I could see most of the Asian markets in the green today, wherein if you see, Nikkei Japan is up by 1.63% already. Shanghai is slightly down 0.06%. But apart from that, if you look at Shanghai is up by 2.27%, and Hang Seng Hong Kong is up by 0.42%. Even Korea is up by 0.11%. So overall, it's a positive sign that's seen. In fact, even the Dow futures have actually rallied by almost 300 points, and it's up more than 1%, which is something good. As I speak, I just see that they have also kind of come down, but then they are still trading in the green. But that's something that we can watch out. And apart from that, if you look at the Nifty futures, it is actually trading at around 15,395. So, probably we could see another small gap up opening today in the market, but will that sustain? That's the big question. Right. So if you see, like, the market has been consolidating in the range of 15,200 to 15,400. So if at all the market opens at a gap up close to 15,400, there are chances immediately we might see some sell off happening. So in fact, if the market is opening above 400 by a large margin, then probably we could see it taking a support at 15,400. But unless it opens above 15,400, we are expecting the market to be bearish again. So if the market opens close to 15,400 also, I would say there would be a major sell-off probably initially, and then after that we would see some recovery. And today evening, as in US markets are reopening, I had told you that US markets were closed yesterday. So today, as they are reopening, Dow futures would be something on watch today. So any weakness in the Dow futures, we could see some more sell-off coming in. But for the Gold Club members, let me tell you, since today is Tuesday, the report is being made early. It's 6:50 right now, and I would say that as the market opens, it's good that we book some profits there, and we will enter a new trade as the market makes some movements. So I will discuss more about that in the Gold Club. But for other members, stay invested and let's make money together. So for important levels today on the lower side, always look at 15,200. 15,200 if broken can be a major fall seen towards 15,000. But as long as 15,200 is not broken, we can see Nifty to be more safer. On the higher side, 15400 is a major resistance for now, and if that is broken, we could see a slight movement towards 15500, and any movement above 15500 and closing above 15500 can be considered a positive for the Nifty. So if you see the Bitcoin or the cryptocurrencies are already kind of recovering. In fact, Bitcoin had touched its lowest of almost $1,700, and right now it's kind of recovered and come back close to 20,000. So that's kind of looking good. But until the markets kind of recover, the cryptos are also not going to recover. So that's what is kind of entire global assets are kind of in the red right now. So let us see how the market reacts today, and based on that we will be taking trades. And members, let us start investing also into good stocks and accumulate them at the right time right now, which can give you great profits in the coming years. So looking forward to have a profitable day. But before we leave, do press the like button and share this with your friends to help them learn and invest together with us. This is Srikant Rajan signing off. Goodbye until we catch up in the post market podcast in the evening.